welcome to BQ Pram. A very good morning to all the viewers. I am Hiral Dadia, and clearly, if you see overall, the market sentiment seems to still have that positivity, though a marginal up move is what we are seeing. 18,784 is where Nifty is trading at, and there is pressure with regards to Bank Nifty overall, which is below the 44,000 mark already. A lot of stock specific action, a lot of banking names that are in focus in today's session. To discuss more, Rohan Mehta from Turtle Wealth joins in. Rohan, good morning and welcome to the show.
Good morning, Hiral.
Rohan, my first question coming to you is you have Axis Bank, which is in focus overall. What's your view? You have Bain, which has gone ahead and sold some stake. There have been a couple of block deals in today's session. 1.3% is overall what they were holding. Firstly, your view, and the second aspect that we're looking at with regards to Axis as well as ICICI, we've been calling them the unidentical twins right now from a price point perspective as well, because both of them are racing to their 1,000 mark. What's your view?
Yeah, first we'll start with Axis. Disclaimer: we hold Axis in our portfolio. One of the PMSs we hold in, and a very and well, it's our top three holding. See, Axis, if you see, it is one of the most undervalued bank we have seen in last 5 years. Last 5 years, it has not seen the growth, and over there was some management issues, and the things came out very well in last 2 years. Still, it is available at 2.2 times of its book value. Whereas if you see HDFC, Kotak, ICICI trailing nearly about 3.2 times of its book value. And after the City acquisition, it can have a U-turn, and I think so. We are looking forward for some. If you see in PSU, if you see in private banking, we feel Axis is one of the most undervalued company, and the valuation is much more better. Thinking on the block deal and structure of it, it's too much on to looking forward for micro into it won't matter much for a longer period of time. But at the end of the day, the way the bank has structured itself, it's totally value. I can say what ICICI Bank was in 2018, 17, 18, and that is what is Axis Bank today. We are looking for at least 2.5 times of Axis Bank in 2 to 3 years. Now coming to HDFC Bank. Now HDFC Bank and HDFC twins, both of the things means it has done its good consolidation of 3 to 4 years. The value has gone better than the price it was quoting pre-COVID, and it was like HDFC Bank was like buying the no-brainer buying, and when the market sees that there is no brainer for buying, it stops you to give returns. So somewhere around, I think so. It's a great time to accumulate both of the companies together, because post acquisition there can be things which can be very decent returns into the company, because we have seen 3 years of non-performance, which has not happened in HDFC Bank from last 15 years. So yeah, that's an interesting thing to happen. So overall, bullish onto it, but yeah, Axis Bank looks more better on a value proposition.
Right. Apart from that, Kotak is in focus as well, and this is on the back of Zurich Insurance looking to buy stake in Kotak General Insurance. Firstly, what's your view in terms of the transaction, which obviously is basis news reports? And number two, what is the kind of bearing it could have on a Kotak Mahindra Bank?
See, Kotak is the same story. If you see on the private side, it is the most valued bank on the valuation matrix, and it has a lot of still things which are into it. There are a lot of emerging companies which can happen in Kotak Bank, and there can be a restructure which can happen maybe today, tomorrow, or 2 years down the line. I don't know when it will happen. So that's the reason it is quoting at a good valuation. Also, the business is also very decent, and it is one of the most celebrated banks. Now, coming to the part is that still I, as an investor or a portfolio manager, would look forward for seeing, the corporate governance, what happens in Kotak, and then going ahead to invest into it. Because still there can be a series of 1 to 2 years of non-performance into the bank, and when I'm getting a better bank at a better valuation, I would certainly put that money into that bank, that is Axis. So waiting for the time of consolidation, what has happened in HDFC in last 2 to 3 years, the same thing we are expecting 1 year or 2 year down the line, Kotak to go. And let us not forget, Kotak is not very aggressive as a management also, doing not doing business, but on a shareholder's point of view. So whatever they will do, they will have a lot of time to think, and then they will go ahead with the same. So I'll again get back to and reconnect when Kotak Bank bought ING and there was a turnaround into the business. Same thing what we expect when Axis Bank has bought City Retail. So that's where Kotak, in comparison of Kotak, Axis looks better, and I think so. Kotak still a year to go ahead and then to rethink to invest.
Absolutely, and Kotak has been one of the underperformers as well from the private banking space. Moving on, in terms of other names, you have the HDFC twins that are in focus as well, and this is mainly because there are news reports suggesting that SEBI is unlikely to give relaxation on the mutual fund holdings post the HDFC twins merger. Firstly, what would this actually mean from a stock perspective, according to you, and what would you advise an investor to do basis the action that can happen?
You see a stock perspective, because most of the time, most of the fund holds HDFC Bank, and HDFC being the biggest contributor in Nifty or whatever index you look forward for. You look forward for Nifty, Nifty 100, Bank, Nifty 500, whatever you talk forward for. And there are SEBI compliances. There are things what we have seen lately also for MSCI and stuffs like that, which may happen, that are hiccups. But let us not forget the value what they come with, what the what is the business they come with. So if I'm a long term investor, I would not think much on that. But if I'm short term investor, I would wait for the merger to be announced and then go forward for it. For a fund perspective, it could be an issue, because that's where you need to understand. You need to keep HDFC, or you need to sell HDFC and HDFC Bank, and you need to buy HDFC Bank. So that's a bit of tricky thing, because there can be some selling on the fund side which may happen, and then again there can be buying. So it's a bit of short term uncertainty, but on an overall point, I think so now it's a value. And specifically, Irala, my value is more on HDFC than HDFC Bank, though it is going to be an HDFC Bank, not HDFC. But still, we believe that an HDFC investor over the period of time with the merger will make more wealth than HDFC Bank, because HDFC still is in a high consolidation area.
Right, so high consolidation area in terms of what we're talking about. Moving on from the IT pack, you have Wipro that has been in focus. In fact, we had an interesting story done by one of our reporters as well, where clearly, what it says is that Wipro's turnaround story is at risk of an about turn. Now, clearly, if you see in terms of the mid-tenure report card of Wipro CEO, which is Thierry Delaporte, that shows that Wipro, which is the largest IT service firm, is absolutely at the crossroads. If you see in terms of the stock performance as well, vis-a-vis the IT index since July 2020, it's underperformed. Apart from that, the margin performance since FY17, Wipro has been at the lowest end versus TCS as well as Infosys. And from a revenue perspective as well, there are some bit of concerns there. But now, how are you looking at it? Because clearly, what they are indicating is that we're just at the cusp of the turnaround. Yes, there will be initial pain, but long term will be something we should be watching out for. Uh, Overall, what's your view, Rohan, on a Wipro vis-a-vis the other large cap IT players?
Yeah, you're saying about Wipro for last 1 year. I'll say Wipro has been underperformed from last 23 years. If you have invested in Wipro in 2000, still it is at the par of what Wipro was in 2000 when the Y2K bull market happened. And there are a lot of reasoning about it. See, when you meet an IT company and specifically meet the management, the business is so complex to understand that eventually you don't get to the nose that what are the things which is happening and the way the world and the IT is changing across in the world. If you see Nasdaq today, anything which is AI is running around, it will never come back. And that's what is happening. So India being a service IT company, we still believe on a whole IT service not to have an upstream outperformance in next 1 to 2 years. Because see, overall the valuation has been given of what they are going to do in by 2025, and there are a lot of small company competition which are going to come. Now when we talk about Wipro, still we believe there is too much confusion on the leadership side on what are the core focus is, what are the things what they're looking forward for, and there is an unbelievable issue onto human power and how the things they're going to take ahead with. So still we believe that Infosys happens to be the top pick on the leadership side, on the large cap style, persistent into mid cap small, and the whole thought process is into the small IT companies, is because this IT companies perpetually come at a valuation which is so much appealing that we will that can create value. But on the larger IT side, we believe that still 1 to 2 years will take care to create value in the proposition of price. And Wipro, we as a fund house believe that it has been a confusing story, so we are out of in Wipro.
Regards to where Wipro goes. Moving on, SJVN Rohan is in focus today, and this is on the back of the pact they've signed with Maharashtra State Power Generation for development of 5,000 megawatt renewable energy projects. Now, this does include hydro, pumped storage, wind, solar, hybrid, as well as green hydrogen units. How are you looking at a SJVN?
Yeah, I mean, it's so free available that you sometimes doubt about that why it is so less. So it's why it is so cheap. Now I happened to meet one of the very big official of SJVN, and I was just talking to it that I was a very early investor. I had a huge bullishness on the stock, but nothing happened. And way back 10 years, I've not looked forward for it. And the way that they are doing the capex and the way the hydro is working, and they are now focused onto it. Also, let us see, the whole power is getting revalued, and the re-ratings are happening across. I believe it's a nobody is seeing SJVN, but and nobody is seeing a PSU stock. I believe that it's a great value over there. It's a buy, and let us see 1 or 2 quarters, if the number gets more better and stronger, it could create more value. The way PFC has surprised everyone on the streets, I'm not surprised that any of the power company, most of the power company in the PSU segment will give us a surprise in next 1 year, and SJVN is one of them.
Right. Moving on, Orin Pro Solutions is trading at their lifetime high, and clearly they've grown at a CAGR of almost 26%, and this is between 2005 to 2023. In fact, they did have their investor and analyst day presentation yesterday, and I mean, if you see in terms of the revenues, from 10 crores in 2005 to almost around 659 crores in 2023. What's your view? And a lot of fund houses are seeming to become positive on this company.
Yeah, it's a very interesting business. We were also looking forward for in last 1 week to understand the business more in depth, because it happens to be a small cap company. So understanding more and more of what are the services. See, this is what I was talking in the IT space. When you look forward for a very, very niche business in IT space, companies like Signity, Orient Pro, companies like PLS Info is all very much interesting into. So very interesting business. Still, we have not completed the whole research out of it, but on the initial stumps, it looks forward for that. It's a promising company road ahead.
Right. How about a Sangam India? Because clearly some strong moves in the last couple of trading sessions. Again, you have seen some HNI entries that have come in as well on a Sangam India. How are you looking at this counter?
So Sangam India, we don't very closely focus onto it, but it looks like a momentum play for sure for the initial areas. So no, don't have more say on Sangam India, but it looks like more on a momentum. Still, it's a very small company of 1,000 crore to comment anything for larger, story.
Right. Moving on from the retail space, you have a VMart retail that has been in focus over the last couple of trading sessions. In fact, analysts have also remained upbeat on the counter. From a valuation perspective and the business perspective, how are you looking at it? Because, when you hear the management as well, they're cautiously optimistic going ahead with regards to where demand goes. They are seeing initial signs of recovery. However, the full recovery is expected to come in only in the second half of FY24. And now, basis this kind of commentary and valuations, do you think this is a good time to enter from a long-term perspective?
See, on the retail side, it looks very good on the outer space, but inner space, it's very confusing and complex. I'll tell you that, as a human, wherever you are in the world, or most of the developed or underdeveloped countries, we spend highest money on the food, and then the second highest we spend on the accessories and clothing. Coming to VMart, being the most of the mix of both of them, still, the complex thing is that still it doesn't make money; it makes losses, and it's a very competitive business. When we saw VMart into in depth, we didn't find any USP or moat what it has over to a lot of other things, and there is a huge competition now by Reliance Retail, and then you look for DMart, and then Aditya Birla, and you can name it, and it has a competition for sure. So on that terms, we still believe that it's not a longer term story to invest with.
Right. And very lastly, Varun Beverages, Rohan. Clearly, the stock in today's session is trading X split. But from a business perspective, how are you looking at a Varun Beverages? Because now clearly it's going to be off season for them as well, with the rains coming in. So this is a quarter where you always usually see volumes inching lower. Your view on the counter with from a valuation perspective as well.
I think it's a great company. It's one of the most valued company, highly valued company in the whole beverage segment for itself. I think so. The Sting was one of the game changer for Varun Beverage, and of course Aquafina to add for it. So overall, we believe that it's a great company. No more point for it, but it's a good time to take out some profit out of the counter and wait for because it's highly valued. Let us not forget there can be a correction, or market was doing it better because there was a bonus split news into it. So it's a time to take book profit a bit of it, and hold for a time, and then wait for 2 to 3 quarters and then invest into it.
Right. So that's with regards to Warren Beverages. So wait and watch for the next couple of, months to understand the valuation, and buy on dip should be the strategy there as well. Thank you, Rohan, so much for joining us on the show and giving us your views on the movers and shakers and newsmakers of the day. That's all that we have on this edition. Thanks for watching. Lots more lined up on the other side. Please stay tuned.